Welcome, everybody. Today is Tuesday, and you are with us live, Minds of Market, live from the floor of the SIBO. I am here in the S&P 500 options pit, better known as the SPX. And you know what? It's been a really calm day so far. Even with S&Ps down about 15 points or so, it's been a really calm day. But I can hear the level, the volume picking up a little bit here. In fact, you guys will probably be able to hear it live as things pick up a little bit here. And I think as we progress a little bit further into the afternoon, closer to the close of the market, there's going to be a lot of positioning ahead of tomorrow with obviously big day tomorrow with CPI in the morning and then the Fed announcement, which we're going to touch on shortly here. Let me give you some real quick stats of what's going on the day so far. Again, S&P's down about 15 points or so. The Dow is the big loser of the day. The Dow was down over 400 points earlier. NASDAQ is actually positive. But overall, I'd say it's a real kind of cautiously optimistic market, if you will. Again, CPI in the morning and then the Fed tomorrow afternoon. There is a really big order that traded in SPX, and I'm going to show this to you here. Oops, I don't want to do that. Still figuring some things out here. Earlier, about 2 hours ago, there was a massive order. March expiration, so going all the way out to next March, the 6,000 strike calls. Let me bring that up here. Man, it takes long to get to, there we go, to March expiration. I'm blow this up here. So the 6,000, that's right, the 6,000 strike calls, those things traded, here they are, 5,000 times earlier. That order was about $16 million, whoever bought those March 6,000 calls. What's great about me standing right here, guys, is I've got the big board right in front of me, right up here. So when you see me looking up here, I'm actually looking at the entire order flow of what is happening in the SPX. So if I see something big come through here, I will let everybody know. But let's kick it off. Let's get right into it here, guys. And I've got this guy joining me here today, and I am so excited to bring in just a super close friend of mine, someone that you may know, someone that's been around this industry for a long time, the BigBeat, Steve Orr. Welcome, Steve. So happy that you are here with me today. And just 30-second, 20-second overview here. Steve has just a year or two less trading experience than me. He's been in this business over 30 years as a trader. He's got a passion for the technology side of things. And man, he is in the process and actually has built up this unbelievable new platform called Quazar Markets. Steve is the founder, the CEO of Quazar Markets. And what Quazar Markets is, it's a startup that offers innovative solutions for equities and futures trading. And basically, and Steve, I know you're going to talk about this, if you could think of the Amazon of the financial world, if you will, that is what Steve is building here. And I'll let him describe it more. But Steve, welcome in. Before we get into Quasar, and we want to hear all about it, let's talk about the markets here. Let's talk about kind of what's been going on up to tomorrow. We've gotten through the jobs number, we got through PCE, and the market, it almost seems Teflon, right? It almost seems like there's this complacency, there's this acceptance of higher for longer, and that it is okay. And I'm not so sure how long that can last, quite honestly. But CPI tomorrow, what are we looking for? Because that's the first thing before the Fed announcement tomorrow.
Well, thanks for having me on the show today, Scott.
Yeah,
That's a pretty highfalutin interview. Bringing me on here, I like that,
I love
especially
it.
my home state of Illinois and from the SIBO.
Yeah,
But
but you're a Cardinals fan, so we got to keep that in mind. So,
that is very
those of
true.
you that are watching that are a Redbird fan, you can listen in. If not, we'll just fly the big W banner here.
I thought it was the big L.
Yeah.
Let's get to it, Scott. You're absolutely right. Tomorrow, huge day, and you're seeing that already in the markets because two things are happening, right? Over the last few weeks, we are going into what I call the doldrums. That is the very time in the summer when we start to see the trading volumes start to slow down. People are going to the beach, they're going on vacation, but we're not seeing it this year.
Yeah.
Actually, what we're seeing is a lot of things going on in the SIBO. Actually, a lot of options trading going on. They're positioning themselves for tomorrow. And I'm seeing a lot of that. Yesterday, you saw the markets jump up. Today, you see them pulling back down. Markets are one thing right now. They're very jittery. They do not really know
Big
what's
time.
going.
Big time.
Yeah. And you know what? As traders, we need to be ahead of that game, I think, a lot of times. And I think tomorrow the CPI data is going to be we're not going to see the inflation. It's going to be maybe either a little higher, a little lower, maybe right in the middle, but not much of a difference. And I'll be honest with you, I don't think we're going to hear much out of Powell tomorrow. I think we're
Well,
going to
what
wait
can
and
he
see what he
say?
says.
What can he say? I mean, we know what's going on right now. We know
I'd
they're
like him to say
data
we're wrong.
dependent. Well, he's been kind of hiding that and stuffing that in the closet for about the last 18 months or so. So I don't think we're going to hear that. But you're right. The market is jittery, and for me, I don't know that I've ever been through a period of time, and I'm not an economist. I love economics. I'm not an economist, where we see news come out that maybe you would think would be good for the markets and it actually turns out bad, or like what happened last Friday with the jobs report, that massive number that came out, which if you had told me ahead of time we were going to see that big of an increase, I would have said the market would have been down 2-3%, and we rallied on Friday. So I think that really is lending itself to the jitters because nobody knows what this eco data really means, and everyone's kind of waiting for the next shoe to drop.
But Scott, I think what a lot of problem we're seeing right now is a difference of Main Street and Wall Street, right? And what you guys are seeing. People on Main Street are going, wow, you know what? Inflation really is happening. The
Yeah, it
price of milk
sucks.
and food has gone up. The price of gasoline has gone up. But yet everybody has a job. So there is an equalization factor happening right now. But when you're seeing that, I'm gonna say like I said last week, it's tech. Tech is what's getting us out of all these problems.
Yeah.
Look at Apple today, up 5.5%
I was
over the
going to
new
get to
tech.
that.
Yeah,
In
sorry. Nvidia is still pushing higher, made down a little
fact,
bit
I'm
down
I'm going to show everybody
higher.
here.
AI is still pushing us higher. So there are spurts of good stuff, but what you're missing is Main Street is not really feeling that good feeling that we should be feeling, and you're seeing that also in politics too, as well.
No, Main Street, or not even Main Street. I think everybody in the markets are looking at this rally, and when I say rally, it's because we're at near all-time highs across the board, and saying this is like the most hated rally ever. It's crazy.
Well, you remember when the days where the good news is bad news is bad news is good news. I
That's
mean,
right.
if we get good news tomorrow, we got good news in jobs, market goes down. Why? Because they're all worried about what Fed's going to do tomorrow. They know, they hope, and we're praying, and everything else we don't like to say about. Well, can you please lower the rates for us because it makes it easier for us to buy cars. It's easier for us to, but the only people that are making money on that is the banks,
That's
right?
right.
Because of if inflations are going up. So how is that stopping it? And I don't think the answer is an easy answer, but the Fed only has one thing. They have this massive
No,
hammer
that's
they're
all.
going to use, and that's all that they have. So I don't think they raise or lower, but I do think we're going into a probably a period of the next 3 months where we do see them start to lower rates. We already saw with the ECB. You saw Christine Lagarde already lowered, probably gritting it through her teeth, saying, "I don't
E-
want to lower rates," but
but
she did.
ECB, Bank of Canada, Switzerland, Sweden.
Right.
Yeah, I mean that does lay the groundwork for us here. It kind of gives the clear path. But listen, given what they have said, and given how vocal many of these Fed heads are about we're not there yet, I just can't imagine Powell saying anything to the effect of expecting a rate cut anytime soon. I think he's going to say, yeah, maybe expect one by the end of the year, but it's all going to be data dependent, blah, 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 blah. But you know that all the algos out there and all the HFTs, the high frequency traders, they're going to be picking up on every word of his that he's going to be hinging on. But before we get into Powell and the Fed, I've got on the screen here Apple
Yeah.
today because you mentioned Apple, which is up $12. I mean, this monster move. I mean, this is a massive move. And what I have up here is option volume. So far today, almost 3.5 million contracts have traded option wise. That's over 3 times already average daily volume, and call to put ratio is 2 to 1. It is decidedly bullish. Um, is this the run everybody was waiting for? I know 200 is a magic number, right? All the big numbers, even numbers, the market likes those even numbers. So everybody was kind of waiting to see if Apple could break 200, and it just, broke through it. Is it going to sustain? Or are we going to pull back? Is this a hangover from yesterday's, big Apple intelligence instead of artificial intelligence? I don't know, but the market loves it, and the option market absolutely loves it.
Well, as you know, I'm not an Apple fan. I think that the problem with Apple has been that they have not been innovating over the last few years. But guess what I did a month ago? I bought a new iPad with the new stuff coming out. I do think that Apple is starting to innovate, and God bless them. I think Apple's finally decided to join the crowd and join the AI thing. And
Yeah.
guess who they invested in? Open
Mhm.
AI. They put Open AI in the chat GP, and Microsoft is one of the biggest investors in Open AI.
And
So when you
what
see those kind of companies come together like that, that's very, very important.
I thought it was really interesting, a little bit comical to see Elon Musk's comments about that. That if Apple actually goes ahead with that, right, he's going to pull all Apple products from all of his employees. I mean, come on, really?
Not gonna happen, Elon.
No,
Sorry, buddy. That's
no.
not gonna happen. But you know what? I do understand his position. I mean, he is building his own LLMs,
Yeah.
as language models for his AI. He's building his own AI with X. Look, it's very simple. It's a dog eat dog world right now, especially in the AI world. You're seeing it everywhere. But I think that the key factors with AI is it making your company more efficient? Is it making you a better place to be? Is it making your employees more efficient? Are you getting a better return out of that AI? And right now, a lot of AI is just, hey, write me a song or write me a poem. That's not going to make anybody money. But what we want to see, right? We want to see AI in the fintech space. We want to see AI in the healthcare sector. We want to see AI in the vacationing sector, making things a lot easier, make it easier to book a plane or a cruise.
Yep, no doubt about it. And hold that thought for a second because I want to talk to you how AI is going to play a role in Quasar.
Ah, sure.
Before we do that, though, after CPI tomorrow morning, we get the Fed decision at 2 o'clock Eastern, 1 o'clock Central. We know they're not going to do anything with rates. They're not going to raise, they're not going to lower. But tomorrow is one of those Fed meetings, and it happens 4 times a year, where we get something called the dot plot. Now, it's kind of like a Rorschach. For any of you that have ever taken a Rorschach with the ink blotter, and you got to figure out, what the shape is that this thing is forming on the screen. It's kind of like that, but the dot plot actually sets out what each individual Fed member is projecting for rates over a period of time. Now, it is done anonymously, so we don't know who is really, projecting what. But does the dot plot really mean anything anymore, Steve?
Yes, I think it does
Okay.
because when I hear people say to me that, um, how do we know what the Fed is thinking? Well, they're actually putting a dot on a graph paper and saying this is what I'm really thinking. Now we don't know that who it is and we don't know where it is, but if we look at it from the perspective of when they start talking, the being the coming the talking heads, you kind of hear them saying about raising or lowering rates in the future. You kind of start to see them on the dot plot. I don't know if you've got one there in front of you
I
for your
am going to put it up on the screen. That's what
Great.
I'm getting here.
But what it is showing for the next all the way to 2026, and they call it the longer run, even the futures. If you want to use it in the options world, uh, we call it long dated options or leaps in
Yep.
the dot plot. But long story short, they are calling for a couple of rate cuts here. Now, last year I said that there'll be only 2 rate cuts this year. So far, knock on wood, I've been right. I didn't think there'd be one in the March yet. But I do think we're going to see rate cuts because the dot plot is saying that. And they're also saying that in the longer run, 2026, 2027, that we'll be back down to 2.5%. That is
Yeah, I don't know about that.
big difference. That's a long way off. I agree. But if you look at it from the next perspective of 2024 and the end of the year here, you're already seeing some of them talking about 4%. So if that's the case, that's a lot. That could be a half a point cut over two cuts, so 25 basis points each time. But what I'm seeing is early part of 2025, all the way down to 3.5%. Why? Because
And
we're going to need cars being sold, houses may be problems. There's a lot of issues here, Scott, that it hurts with higher rates.
you're right, and I have one pulled up on the screen now, and you just said 2025 down to 3.5%. Well, if we look at what this is the dot plot from March. As I said, this comes out 4 times a year. It comes out quarterly. So this is the dot plot from March, and we could see at that point in March, year end 2025, they had the median at 3.9%. Year end 2026 down to 3.1%. Here's the problem I have with not the dot plot, but everything here. They say that they want to get to their target of 2%. Okay? That's just not going to happen. It's certainly not going to happen anytime soon. I don't see how it could happen in the next 5 years. So does that mean that slowly, gradually, the Fed is going to say, maybe it's not 2% target anymore. Maybe it is 2.5% target. That's kind of where I think they're going with that. But anyway, that'll be an interesting thing to see what that data shows us tomorrow. Obviously, it's not the decision that's going to impact the markets tomorrow. It's going to be whatever Fed Chairman Powell says. So at 2 o'clock Eastern, probably won't see the market change much. Everybody's going to gear up for his commentary right afterwards. Now, let's talk about Quasar Markets. What is Quasar Markets?
I have been in the markets, as you said, a long time, and I've watched the markets go up and down. And I always felt that. And Scott, when I started with graph paper and pen. I wasn't even allowed to use a pencil because they said if I used a pencil, I could have changed my marks off. And over time, I have watched what I call the fintech space change over time. And I know what users that traders want. I know how they want to see their data as you keep looking up at the big board.
Yep.
Why? It's the way it's laid out. I want to see to give the everyday user, an everyday person in the markets, whether you're a trader, whether you're just an investor, or whether you just want a lifestyle platform. I want to be able to create that, and I want to create the Amazon of finance, meaning have all kinds of third-party products right onto the platform, like SIBO and like other exchanges, and be able to see data the way that the user wants to see, and not just because that's how it's laid out for that company. And giving the power back to the actual. One of the things that we saw was the roaring kitty talking about the short interest. Well,
What
he
a
didn't
what a
really.
scam that was, by the way. I watched that thing because I thought it was going to be, actually useful for trade. What a scam. What a
It was
scam.
total
Anyway.
scam. I don't even think he knew what he meant was talking about.
No.
Maybe he was a little drunk. But you look at it, they found something. They found short interest data. Well, for many, many years, Scott, only the professionals had short interest data. We knew what was happening. We knew what hedge funds were doing, right? But as those data points became prevalent to the actually everyday user, they started to see these things. And I think that I always say, I want to level the playing field. That's been my saying for many, many years, allowing everybody to have access to the same amount of data. And that's what we're doing. And what if I could do that all in Web3 and AI, producing even better returns, a better understanding of the markets, and maybe finding out answers that we didn't really actually know, questions to actually ask. Right.
Yep.
One of the things that I found this week in my AI was I wanted to know a little bit about, and believe it or not, across the street from you is the CBOT is hogs. Right. We saw an uptick in exports of hogs. Why? Because grain exports were down and sugar prices were going lower. Why was that a big deal? I didn't even know. And that's what I wanted the AI to tell me. We're also going to have an AI for options that's coming out very soon. Within the next 30 days, you'll be able to ask questions about what the most popular option. I know you love implied volatility. You'll be able to ask questions about implied volatility. You'll be able to ask questions about, okay, what do we expect the SPY to do today? Those are the kind of things that I want to know before they happen and give me ideas to trade.
So on the platform, okay, someone logs in to Quasar Markets. Yeah, desktop is there an app, by the way, for mobile,
Oh,
or
yes. We built it in Web3, so you don't even need to download an app anymore. It's automatic now.
okay, so someone logs on and they can customize it with widgets to get whatever news they want all in a centralized place. Can they get a trading platform? What else can you bring in?
Well, I think one of the cool things about the platform is we are bringing in data that's not normal data too as well. Yes, you'll have stock quotes. Yes, you'll have watch lists. Yes, you'll have all the things that you normally have. But what if I could bring you WASD reports? What if I could bring you commitment of trader reports? What if I could bring you trade halts without having to have 25 screens like I do? Yeah, I know you do, Scott, all in one platform.
Yep.
And if we go to a mobile phone and boom, I can touch right there and see the same data on that same platform. And what if I could do it in wearables like Oculus and Apple Vision Pro? It doesn't matter where you are, or
Oh,
on
I
your
thought you meant
watch.
wearables like this, like my
The
Prosper
Prosper
golf shirt
trading
here.
shirt, I
Yeah.
like it. I've got a Prosper hat somewhere here. It's
You
right behind.
do. I know you do.
Yeah, and I think that's one of the cool things about bringing data to everyone is that I'm agnostic as to what they want to see, but I want to make sure that they get the most professional data and not something that someone's making up and shoving it up onto Twitter or to, out of social media and say, buy this because of this. I want people to have the actual data and make up their own minds and make their own decisions.
If anybody has a question for Steve about Quasar Markets, you can put it in the chat here. If anybody has a question for me about what's going on the floor here, or why I keep looking up ahead of me over here or over that way, which the VIX pit is over there, let me know. Going back to Quasar Markets, when's going to be the big launch for this? I know you've been working on this really, really, hard, and lot of time, sweat, effort, energy, and funding into it. So
Yeah, it's interesting, Scott. Last year, I was at the Bitcoin conference, and I'm getting ready to go to the Bitcoin conference back in Nashville this year. Last year was in Miami, and I said, you know what? I know what to do. I know how to build this, and so we started the company. Get all the paperwork done for both Delaware and Florida, and got it started in July the 18th. So that'll be our 1 year anniversary. But we started working on it mid August. Long story short, I think by the mid July.
here, let me show people what it looks like. That one right there. That's it right here.
Yeah, and one of the cool things about it is I wanted to make it so that it was so intuitive, and so the new version will have a "Hey, I want options data. Hey, I want this," and it'll automatically set your platform up for you. Not too many people do that actually, and I wanted to
I
do it in
got
a way that was like Minority Report, so that you could touch the screens on iPads and move things around, or in your Oculus, and actually put them where you wanted to put them, and actually be able to touch the screens, make charts the way you wanted to. Remember the days when I had to draw them out, or going on to certain companies and had to input the numbers. Now you don't need to do that. Now you can just touch them, draw it on your fingers, or with a Apple Pencil or whatever. That is what I wanted. I wanted to bring it to the next level, and there's no platform out there doing that yet, and we've done it.
can't wait to I've seen some of the early versions. I can't wait to see the next one. Let me hit this question right here real quickly.
Sure.
Detroit John, how are you, Detroit John? Are you really from Detroit? That's what I have to ask. And if you are you a Lions fan? So if I'm going to give you the right answer, I need to know if you're a Lions fan or not. Because we're gonna have, if you are, Lions and the Bears are going to have a quite a rivalry this year. But Detroit John asks, is the Apple volume above average today? It is massive right now, and we're only right in Detroit. All right, we're only halfway through the day or so, a little bit more than halfway through the day. 3.5 times average daily volume in Apple. So on any given day, average daily option volume is about 1 million contracts. We're about 3.5 million contracts right now, over 2 to 1 on the call side. So I can bring up again here, everybody. Let me bring up Apple and look for, here we go. And let's look at this chart up here, guys. This is the Apple wick here today. That is just unbelievable. That is unbelievable. What I am going to look for is to see which options might really be standing out here. And I will do that in a moment here. I want to get back
And
to
I'll
Steve.
and
And
I'll tell
so
you, Scott,
on
that the
Quasar,
volume. Yep. Hold on. On the volume of Apple, the average 30-day volume is 61 million shares a day. We're now at 114 million, which tells me that not only are options hot on this, it also tells me that people are long term on this too as well. That this is not a short term trade. So
yeah,
I
we're
think when
doubled.
it's right. That's a big sign to me.
Double volume. That is huge. So let me ask you something, and maybe there's an idea. Maybe you have it on Quasar. If you can do this anywhere right now. You could say, okay, tell me Apple volume of the day on Quasar. You want to know that? How easily would someone be able to find that?
Yeah, it's literally as easy as your voice too, as well. We have it in two ways. We have it in the widget, so you can put it in a widget in your layout, or you can
Okay.
also have it where you just push the button, or you can also go on the platform and click on the AI side and go right into the platform itself. But we also built it with large language modeling too, as well, so you can actually physically talk to it like a Siri or an Alexa and ask the questions of it too, as well.
Awesome. Here, I brought up some Apple volume for today, everybody. And if we look right here, these are this week's expiring options. So this Friday, the 14th, look at the volume over here on the call side from the 200 up to the 205 strike. 218,000, 140,000, 220,000. Go out up to the 210 strike. You've got 117,000. These are just options expiring this week. Go out to next week, and it's always the front week. It's always the closest dated where you're going to see the heaviest volume. But even next week, if we go out and look at the 205, let's see, 205 strikes got 80 plus thousand, the 210 80,000. So it is massive. And the rally that we have seen in tech over the last several months, really, which, Steve, you touched on it earlier and I agree with you, that has really kind of held this market in place. It has done it for the most part, without Apple.
That's
Now
right.
you've got Apple involved here. Does that mean it's going to take some of the limelight away from some of the others, or is that going to be, um, you know, is it just going to? Are we back to the Fabulous Five, Magnificent Seven, whatever you
Well,
want
a
to
lot
talk
of money
about?
came out of Apple into the tech space, the semis like Taiwan Semi and Nvidia and ARM. And when you look at it from that perspective, maybe some of that money that was put into that has gotten a little pricey and now is going into Apple because they're now joining the AI revolution now, finally, after all these years. But
It's Apple intelligence. It's not artificial intelligence.
I don't even know what Apple Intelligence means.
I don't know either.
But I will say this much. I will say that Apple is starting to push the envelope now, and I do like that fact. And so when you're looking at it from that perspective, I'll tell you this much. You're seeing higher volumes in call, longer leaps. People are believing in Apple again.
That's a good thing. I mean, I really think that's a good thing. We don't want to see that continued dominance, really from Nvidia. I mean, you want to see it spread the wealth around. I think that's better for the market overall. So things are. Hang on, let me show everybody what's going on here. For those of you, I know you've asked about this before. I'm going to pan across the floor here. So this is the actual S&P 500 options pit here at the SIBO. There is still open outcry. Just like the old days when I used to be slugging it out with a lot of these people in here, literally shoulder to shoulder, that does still happen. It happens here every day in this pit over here that I'm pointing to, which is the VIX pit, and then in the corner over there is the Russell pit. So for those of you that didn't know that live trade still happens, it does. And if you're ever here in Chicago and you'd like to see it in person, I am happy to escort you down here and show you. Steve, thank you. I know this is not going to be the last time we are on together. And in fact, I am going to see Steve tomorrow night. We are both going to New York tomorrow. We were invited to a private conference, if you will, over at the NASDAQ, which we both participate in quite often. So we both will be there. So I look forward to seeing you in person tomorrow night, catching up and maybe having a beverage or two, discussing Cubs and Cardinals. What is going on as the volume is picking
One
up
thing,
over here?
Scott, you should show them and I love it. Show them where the bell is.
Right over there, guys. See that bell right over there? That is what they ring on the opening and the closing of the market, right next to the American flag there. I think you can all see it.
And
So
you have I have been to a few bell ringings.
we have. I think we're going to be at the NASDAQ one on Thursday, right?
That's right.
That's awesome. So before we sign off, everybody, and again, Steve, thank you so much. We'll see you tomorrow night. Much, much appreciated. Before we sign off, everybody, want to let everybody know that tonight, Prosper Trading, we are hosting a live webinar. Yes, our webinars are live. We get asked that all the time. 8 o'clock Eastern, 7 o'clock Central Time. And this webinar is going to focus on discovering how traders are using our tax advantage system to invest in gold in 2024, because we do have a gold business. That is something that everybody should be taking a look at, whether it's for longer term, for IRAs, whatever it may be. You should be looking at that. And things we're going to talk about, we're going to explore why it's important to consider potential economic downturns, inflation, national debt, all that, why that is so incredibly important. And then, honestly, how can you strategically prepare your portfolio for a potential surge in gold up to 2,600? We know that we're almost back to all-time highs, pulled back a little bit. So anybody that is interested, please, please, please register for that tonight. That is a live presentation, 8 o'clock Eastern, 7 o'clock Central Time. All right, guys, that is going to be a wrap on your Minds of Market live. Will not be here Thursday because, again, I will be live in New York at the NASDAQ, so I won't be here Thursday, but I look forward to seeing you the next time. And if everybody can remember, if you wouldn't mind to hit subscribe, like, all that good stuff on here, I would really appreciate it. Have a fantastic day, everybody.